Hi guys, welcome back to ASX Market Watch. Thank you so much for joining me today. It's really great to have you. We'll try and make it a quick one today because we're looking at the entire world from a chartist's point of view, so there's a lot to get through. And why do we do that? We look at all the indices around the world, like the Dow Jones in America, the Seng in Asia, we look at the All Ordinaries down under Australia, and we also look at the FTSE in Europe. And the reason why we do that is just because market wizard William O'Neill believes that 3 out of 4 stocks will actually follow the overall market. And the overall market, we can tell which way it's heading by looking at the index. So first of all, what I'm going to do, guys, is just start with the Dow Jones, because the Dow Jones is the most beautiful looking chart at the moment. The other ones are not making me happy. So the Dow Jones is the one that I like the most at the moment. I'm going to start there. Now, why is it such a better looking chart? Well, it's very simple. Over the last couple of days and over the last couple of weeks, and even months actually really as well, we've made quite a few great calls on the Dow Jones. Now this little consolidation period here is around the previous high. That tends to be what happens. The market does consolidate around previous highs. We've gone into that around previous market watches, so check that out if you want to for the reasons why that happens. What we've been doing from an Elliott wave point of view is, as you know, Elliott wave will go 5 waves up, so 1, 2, 3, 4, 5. We're heading into our 5th wave, so this is the last wave, and potentially the last wave up, and then we'll have a little ABC correction down, or 1, 2, 3 pattern down. Usually. Now, what we've got on the Dow Jones, it's in the zone basically. So it's in the zone, the perfect target. It's hit the 50% extension of the previous move. Now, wave 5 will usually go between 50% and 75%. So yes, the Dow Jones has hit that target now, but it still is looking, it's still in that upward trend. It's still looking very nice. What we'd be looking for that exit signal would be a little zigzag down, so a lower peak, and then for the price to trade through it. Basically, I'm not sure if I can draw this in, but oh yes, it will let me. There we go. So like a little zigzag pattern down like that, guys. That's what you'd be looking out for the end of the trend, basically. And yeah, so happy days on the Dow Jones. And again, it's still in that up wave, that wave 5. So that's excellent. Loving that. Now, the next one I'm going to look at is the FTSE, because this is slightly less good looking than the Dow Jones, and definitely still better looking than the ASX All Ordinaries. And even the Seng, guys. So yeah, those ones I'll leave till last. But this is the FTSE, just really quickly. And again, what we've got 1, 2, 3, 4, 5 waves up. We're in the zone again for the FTSE. So what I mean by in the zone is, if I can just draw this in, there we go. We'll go there and there, and again we had the consolidation around the previous highs. That's the one there. And what we've got at the moment, the FTSE is great from the Elliott wave point of view, because if the wave 5, which is this wave 5 here, so this is the last wave again, it has reached between 50% and 75%. It's pretty much been smack bang in the middle, and 61.8, which is a Fibonacci number, guys. I go into that in previous ASX market watches again. Or you can Google it. Fibonacci numbers are used predominantly in Elliott wave trading as well. So that's an extension of 61.8% of the previous move. And what have we got here? Just as a single bar analysis, this single bar here. So it's got a medium open. So it's opened in the middle. It's gone up during the day, and then it's closed well on its lows. And it's been supported by the next move down as well. So that means this traditionally means that sellers have come back into the market to push the market down over the day. Now that move has then been supported on the following day. So that's like a really short-term sell signal, guys, on the FTSE. Again, what would we look for a better short-term sell signal? Would be that zigzag down. Exactly, guys. So yeah, so very simple stuff on the FTSE. Again, it's still technically in its uptrend. If you wanted to get really short term, I'd go that's your short term sell signal there, especially because we've met our targets. And of course, there's still support. So again, it's a tricky one. We've got our support at 5,800 and 5,400 on the FTSE. So you could see that zigzag down to touch any of those two supports that we've got there from the long-term trend lines. So pretty simple stuff. And like, yeah, we are using a lot of different tools at the moment, a lot of different charting tools. So that can help support your current trading or investing philosophy by using any of those tools, which is a great thing. Now, next up, guys, we're looking at the All Ordinaries. So the All Ordinaries is, now last week we did say that, what have we got here? Anyone, you know, what have we got? We got that zigzag pattern down. Exactly. Now, I wasn't going to call it last week just because of the low volume that we get down here over the Christmas period. So all the traders and investors, the fund managers go on holidays. Technically, there's no volume in the charts or on the markets during that time, and I was just waiting to see if the move would be supported or not. So that down move has been supported when the volumes come back into the markets. So yes, that's your short-term exit signal on the All Ordinaries at the moment. And if you look at the news, guys, I mean, it's plain to see why. We've got flooding, we've got you know, all sorts of stuff happening around, especially Queensland, Western Australia, and it's, you know, a lot of rain coming down and a lot of damage done to quite a few communities, especially mining communities. So yes. I mean, that's sort of if you were looking for the reasons why. But again, the chart really does tell that story. So we've already got that zigzag down. Did it meet its Elliott wave target? Well, look, it pretty much was so close. It was just ridiculous. But again, that just does signal a weak market. Its initial target was 4,900. And yes, it pretty much just touched it and then bounced straight off. So guys, again, yes, it had been in the zone, and we have got that short-term downtrend for the All Ordinaries as well. Now, one thing again to look out for, guys, is we've still got all these uptrends, and I'll just enlarge this a bit more again because we've got a nice beautiful one from the bottom of the bear market. We've got two uptrends. Now, we've got support at 4,750 approximately and 4,700. So those are our two levels of support, guys, for the All Ordinaries. And yeah, so short term in a downtrend, but still got our long-term uptrend lines as well. So again, what we could be expecting from an Elliott wave point of view would be a longer-term zigzag. And I'll just see if I can get, there we go, zigzag movement down. Now, if we were to combine all our rules as well, like so just quickly, we've got a down move, but it could find that support at the long-term uptrend line, travel upwards along that line for quite a, you know, for maybe a couple of weeks, and then head back down to complete the last move. So that little ABC correction, which is what we're looking for as part of Elliott wave. So that's potentially what can happen if you were to follow Elliott wave's methodology. And again, other people may have different Elliott wave counts. That's just the way that I personally see it. It is a subjective medium. The lower peak and lower trough, that's why I tend to use that in conjunction with it, because that's more of a solid entry and exit signal. And again, none of these methods are right all of the time, guys. So obviously take it with a grain of salt. We've been very lucky over the last 6 months to 8 months in getting a lot of these things correct. But again, it's never right 100% of the time. And anyone who tells you that they are right 100% of the time, do not believe them, because it's him. Seriously, no one is, and you don't have to be to make money in the markets as well. Last but not least, guys, Hang Seng. Now, Hang Seng again, last week, what did we say? We said zigzag movement up. If it completes, we get more of an up move, and that's exactly what happened. So happy days on the Hang Seng. Really, again, that's not rocket science. It crossed the downtrend line, and we had that zigzag move up. So that was our short-term buy signal, or short-term entry signal for the Hang Seng. And again, we're just waiting to see. It's still got that long-term support on the uptrend as well for the Hang Seng. So this is good news for the Hang Seng. Actually, look, I mean, quite frankly, if this uptrend does continue, what we could see, yeah, we could see 24,700, we could see 25,000. So that's potentially what we could see on the Hang Seng. Again, if it breaks down past that uptrend line, then we're in trouble. But until then, those are the two targets that you could potentially be looking out for on the Hang Seng. So no dramas at all. It's all good. You know, it's still happening. The markets are starting to separate from each other, and that hasn't happened in quite a long time. But you know what? I just have to call it as I see it, and it's not as happy days as it used to be. But hey, these things do happen. So again, looking for these potential ABC corrections on the markets, except for the Dow Jones, which is still going strong. And again, we'll get the exit signal when it does happen, guys. So I hope that helps on the markets around the world. So until then, happy trending and have a great week. And I will see you next week in the next ASX Market Watch. Thanks very much, guys. Bye for now.